appreciate the opportunity to visit with you a little bit about cattle markets in the U.S. Hopefully, you can use this information ultimately to help you make some decisions in your own operation. This is a two-part webinar. So part one is going to be kind of the big picture view of the cattle market, sort of the 30,000 foot view. This is a really big industry. It's quite complicated. It has lots of moving parts. And so I'm going to go through some of that. I'm an economist, so I use lots of numbers and data, and you'll see a lot of charts and graphs of numbers and things, which may or may not mean a whole lot to you. Some people relate well to them, others not so much, but they're what I use to sort of tell the story that I want to tell you. So we're going to do that. The second webinar, we'll get then a little bit more into the details kind of at your level in terms of how you use this information and some things maybe that you can utilize to help you make decisions in your own operation. So let me start here and just go through this big picture view of the cattle markets. I'm going to do a rundown of kind of where we are price-wise with cattle markets, generally speaking. A fair amount of my data is either Southern Plains or Oklahoma-based prices, so you may have to translate them to wherever you are. There is a relationship between prices around the country for cattle, especially feeder cattle, but the trends will all be the same. The general tendencies. This is one big industry, even though we operate in a lot of different environments around the country. So this first graph just shows you kind of calf prices. The take-home message here, the dotted line is last year's weekly average prices. We were moving higher continuously through the year. We're still moving higher so far in the blue line here for 2024. So we're continuing to move higher. We're going to talk about why that is, how we got here, and then a little bit about where we're going to go from here, which is really the important part. If we look at bigger feeder cattle, heavier weight feeder cattle, it's much the same story. One difference is that last year, at the end of the year, we did see a fall off in these markets. It was a correction that was largely driven by the futures market. It wasn't really based in cash market fundamentals. And you can see that we are in the process of recovering from that and sort of picking up where we left off. I think that's kind of the way to think about this market. We are continuing to move higher this year, certainly so far in 2024. If you plot prices for feeder cattle by weight, so the bottom here is weight of, these are steer prices in Oklahoma. So 425, 475 pound steers, all the way up to 900 pound steers, 800 or 900 pound steers, and plot the prices for at any point in time, you get a line that looks kind of like this. And I just wanted to highlight a couple things right here. First of all, you see that compared to last fall, so we've got early November on the green line, and that says December 22nd. I forgot to change the date. That's not December 22nd. That was actually last week's average prices. And so that was February. And you can see that, what's happened is that those lightweight calf prices have continued to move higher at a faster pace than the heavier weight feeder cattle. And that's pretty typical of the market we're in now. In a tight supply situation, the market becomes heavily focused on the cow-calf level. And I don't know, all of your operations. I suspect that many of you listening are cow-calf producers. You may also be involved in stocker or backgrounding operations, and possibly all the way to cattle feeding and feedlot production. But if you're in the cow-calf sector, this market is really focused on your sector right now because of where we are from an inventory standpoint, which we will look at. If we go on up the chain here of cattle markets, let's look at fed cattle prices. Again, generally the same story. We moved higher, except for a little correction at the end of last year. We're moving back higher again. These prices, cash prices in about April of last year, were all-time record prices. And it was kind of steady most of the rest of the year. We're going to move higher and go even higher. And I should say that all of these prices, the calf price, the feeder cattle price, and the fed market, are all moving to record levels. And that you can see that here in this graph. This puts more historical context on where we are. So the right-hand side over here is current February prices for calves, feeder cattle in the green, and the fed cattle in red. And you can see they all tend to move together. They don't move together by the same amount. And that's one of the important parts of where we are. Now, many of you will remember about 10 years ago, we had a similar kind of a setup in markets that was caused, broadly speaking, by the same forces. We had drought in the US, particularly down here where I live in Oklahoma and Texas in 2011, 12, and 13. And that drought caused cattle herd liquidation that set up then these high prices in response to that, as the market tried to encourage producers to rebuild that cow herd. Broadly speaking, we have a similar setup now. We've had drought since 2020 in parts of the country, 2021 in the northern plains, particularly 2022 and 23 in the central and southern plains and various other places. And so again, we've got small inventories, and the market is providing these price incentives to help encourage or incentivize producers, cow-calf producers in particular, to rebuild this industry. And so it looks a lot like what happened 10 years ago. I will tell you now that I think while there's some similarities, there's some important differences. First of all, this looks like kind of like we're near the peak that we were at 10 years ago. We are not at the peak yet. We have a ways to go yet. So we'll come back to that and talk about that more as we go forward here. Just to round out the sort of rundown of various cattle markets, if we look at the cull cow market, this has got the last 3 years of weekly average prices. We've been moving higher every year. So 2021, 22 in blue, 23 in red, and so far in 2024, these cull cow prices again are at very elevated levels. Numbers are tight, and so these would be cows mostly going to slaughter. Although in this kind of a market, there's a lot of incentive to sort of see if these cows are capable of having another calf and take advantage of these high calf prices. If we look specifically at the bred cow market, now these are auction prices, so they're not really indicative of what happens out in the country, but they certainly capture the trend. So we moved higher last year. We're moving higher even faster so far this year, and I think we'll see more of that. If you happen to be in a situation where you are down in numbers and you're looking to rebuild or acquire some additional breeding heifers or cows, this market is going to get increasingly expensive as we go forward. And certainly, again, the prices out in the country that you would hear would be significantly higher than this, and they're probably likely to move much higher as we go forward. Okay, so now let's turn our attention to kind of how we got here to some extent, and what the setup is and where we go from here. This chart has 2 lines on it on different scales. The dotted line is the all cattle and calves inventory. So this is the inventory of all the cattle in the country, measured over here in million a head. And so you can see what happened from, we had a low 10 years ago. We rebuilt numbers in the US to a peak in 2019, and we started a relatively slow liquidation, but then it accelerated sharply with drought. And so we've seen the numbers drop off to a level even lower than 2014. We'll talk about these in more detail briefly in a minute. But the bottom line is then beef production goes up when we're building numbers. We have more animals to produce meat. It also goes up when we're liquidating initially because we're selling animals that we can't keep because of drought. So we had peak beef production in 2022, but you can't sustain that because numbers are going lower during a drought. Eventually, beef production starts to fall. And that's where we come into 2024 with beef production down last year. We'll get to the end here and the forecast, but beef production is continuing to fall. So we've got smaller cattle inventories and smaller beef production. All of those things are going to generally support higher prices in this industry. We'll talk a little bit about demand along the way too, because it certainly has a big impact on consumers and on international trade of cattle and beef. So beef production is falling. This is a busy weekly chart, but it just shows so far this year, beef production is down about 5%. And in fact, that's about our estimate for the whole year. We expect beef production to be down another 5%. It dropped about 4.7% last year on a year-over-year basis. So, again, we continue to see smaller supplies of beef. The inventory of cattle, there's a lot of numbers here, and I'm not going to go through them all, but USDA releases these numbers early in the year for January 1. Many of you, if you're producers, you probably get these surveys from NASS asking you, what numbers of cattle you had. And so these are the results of that for the whole nation. Again, we continue to get smaller. That's the bottom line. All cattle and calves inventory was down almost 2%. Beef cows down another 2.5%. Beef replacement heifers were down. Feeder supplies down. All of these numbers, for the most part, are negative. Temporarily, the cattle on feed number was a little higher, but we'll look at these in a bit more detail. The calf crop continues to get smaller. The U.S. calf crop actually was at its largest in the last cycle in 2018. So we've been getting smaller for 5 years, and that's the situation, the setup going into it now. So all cattle and calves, this goes back all the way to the Civil War, but you can see, first of all, you can see the cyclical nature of this industry. We do tend to have these cycles, these ups and downs in inventory, and there's sort of an opposite corresponding price cycle, generally speaking. But the important thing is that on the far right-hand side, the current inventory of cattle and calves in the U.S. is actually the smallest inventory since 1951. So we're smaller than we've been in 73 years. We're smaller than we need to be. We didn't get here because we planned to get this small. Again, it's a function of drought. And the market will support a bigger industry and is encouraging us to grow, to regrow, and to reclaim a bigger industry. And so that's gonna be a major factor affecting prices going forward. The beef cow herd, which is the primary source of supply for the industry, is actually currently at the smallest level since 1961. So again, smallest inventory in a long, long time. In 2014, when we were this low, there were strong incentives to rebuild the industry. Now we're even lower. And I think the incentives will be even stronger, frankly, to rebuild this industry again when we can. So there's sort of two questions here. One is sort of what's what's Mother Nature going to allow us to do? We'll talk about drought here in just a little bit. What is what we can do. The other one then is what do we want to do? And the market will provide incentives to producers to try to influence or incentivize, encourage producers to respond to the conditions of the overall marketplace. Beef replacement heifers, again, are small. In fact, the last 2 years, 2023 and 2024, are the first time since 1950 that we've had less than 5 million beef replacement heifers in this country. So all of these measures point to the same thing. We're the smallest we've been in many decades, and that's the situation. And this heifer one is particularly important because it means that we really can't rebuild very fast. We don't have the pipeline of heifers in place to rebuild this industry very fast. And that's going to be important when we talk about the timing of when we can rebuild, and probably more importantly to producers is how long is this situation going to last as we go forward. And that's where we'll end up when we get done here. Just a quick list of the sort of top 10 beef cow states. So you can see them here: South Dakota, Texas, Oklahoma, Missouri, Nebraska, South Dakota, Kansas, Montana, Kentucky, Florida, and Nebraska, and North Dakota, excuse me. Top 10, it's a fairly similar list, some changes on the beef heifers, but that gives you an idea. Beef cattle production is important all over the country. Anywhere there's grass, basically, we have beef cows. But if you look at the total numbers, they tend to be in the middle of the country. And so a lot of the cattle are found basically from the Canadian border in North Dakota, south through the Texas border, right through the middle of the country. Out of the inventory report, we also estimate feeder supply. So this is the supply of young cattle that are available to go into feedlots. Feedlots have an inventory right now. In fact, right now it's just fractionally bigger than a year ago, but it's coming down and will come down. And these supply of feeder cattle will dictate the availability of cattle for feedlots in the coming months as we go forward. And so if you look at those feeder supply states again, feeder supply tends to be heavily concentrated in the southern plains. Texas, Oklahoma, and Kansas typically have about 28% of all the feeder supply. But again, those big beef cow states in many cases are also states that have a lot of the feeder cattle on January 1. Okay, let's talk a little bit about the drought situation. This is the latest drought map, drought monitor. And it shows, you know, if you follow this and you've watched it over the past year, well, really 2.5 to 3 years, this is about as good as it has looked at any time during that period. We do still have some drought around, but it's relatively minor in most cases. But we also have a lot of areas that are either not in drought or in very low levels of drought, but they could certainly rebuild drought very quickly. And that's a concern going forward in 2024. In many cases, we've got moisture to start the year. Certainly that's true here in Oklahoma where I'm at. We've got pretty good moisture right now. We're going to have a good start to the year, but the meteorologists are not very encouraging. They're saying that El Nino, which has largely been responsible for lightening up the drought, is on its way out. And in fact, we may be back into La Nina conditions related to the Pacific water temperatures, and that may encourage redevelopment of drought as we go forward into the latter half of 2024. So there's a lot of attention and a lot of eyes on that long-term weather forecast going forward in terms of what we might be able to anticipate going forward. Because of the drought, hay production in 2022 was the lowest, certainly on this graph, in many, many years. It did recover slightly in 2023, as did the availability of hay going into the winter. So December 1 hay stocks were slightly higher in 2023. This is the hay supply we're working on this winter to get through. And depending on where you are, you know, here's the map of alfalfa production, which is very important in the northern half of the country. A little bit less so in the southern part of the country. And the changes in that were mostly positive, but relatively minor in terms of the increase in hay production. It was down for the most part in the eastern half of the country. Other hay, so non-alfalfa hay is the other category of data for hay. Other hay production is particularly important in the southern half of the country. And that was up last year as well in many cases. And so we did see pretty much, you know, in many places, some increase in hay production and hay stocks coming into the winter. But it's, you know, it's still low by long-term averages in most cases. And as a result of that, hay prices, which were at record high levels in 2022, did you know, decrease modestly in 2023, but they're still relatively high. That's part of the challenge producers are facing with continued cost of production in terms of the hay price. I'm going to talk a little bit about feed markets for just a minute as well. And so if we look at corn prices, they are sharply lower. This is Omaha. They came down through the year last year. We're starting the year with the lowest corn prices we've had in several years because we had a record high or record corn crop in 2023. So this bar, second to the right-hand side, is the current crop year. Record high prices, and that's leading to a sharp increase in ending stocks. All of that means that the prices have decreased after being very elevated for 2 years in particular. We're going to see corn prices average significantly lower. So that will help producers in terms of your supplemental feeds in many cases. In addition, you know, and that's another factor in addition to your hay price. It's most important in the cattle industry in terms of the impact on feedlot cost of gain. And so this is data out of Kansas. Feedlot cost of production had been extremely high through the first half of 2023. It had increased sharply the previous 2 years. It is now coming down based on these lower corn prices. So we will see some relief from high feed prices at that level. Of course, feedlots have to factor in their cost of gain, or their cost of gain relative to the prices they're having to pay for feeder cattle. So this is going to help them somewhat. However, they're going to struggle in lots of other ways. Feedlot totals are currently just barely above a year ago levels. That's this dotted line, and we just got data a week ago for the monthly cattle on feed. It will, I expect, going forward, continue to drop. In fact, if you look at this, there's a lot of stuff on here, but the green line shows, it's an average, shows that feedlot inventories continued to increase through until late 2022. And then they did begin to decrease, but they actually stayed higher longer than you would expect. The calf crop, I mentioned earlier, actually peaked in 2018. And so we should have seen feedlot inventories peak and begin declining by 2020 at any rate, and that did not happen. They continued to go up. They are coming down somewhat now, but they're probably going to drop a lot farther. I would expect in the next few months we will see feedlot inventories drop probably another million head or so from where they are now, because again, we simply don't have the cattle. And the reason that feedlots were able to hold inventories as high as long as they did was because we've continued to place and feed a lot of heifers. And so, you know, in the cattle industry, we get one offspring at a time. Every cow, on average, has one calf. We can't count on litters in this industry. And so we get one calf, and if it's a heifer calf, we got a choice. We can use it either to feed and become part of the beef supply, or we can keep it for breeding. But it's a one-for-one choice. And as this graph tells you that we've been running, we're still running about 40% of all the cattle in the feedlots are heifers. If they're in the feedlot and they're being fed and they're going to be slaughtered for beef production, then they're clearly not out being retained for breeding in the country. And so that's the biggest reason we've been able to maintain feedlot inventories and actually keep beef production higher longer in the short run because of heifer feeding. However, if you ever want to regrow the industry, you got to stop doing that at some point. And so this heifer on feed inventory should begin to drop as we go forward and start retaining those heifers, keeping them out of feedlots so that we can use them for breeding and become part of the cow herd. We'll come back to that in a minute, and we'll talk specifically about the cow herd and the potential for regrowing that. And that's where we'll end up here in just a little bit. So far this year, cattle slaughter is down 4.3%. Excuse me, it's down about 5.8% this year. It was down 4.3% last year. And you can see that heifer slaughter so far this year is actually accelerating a little bit. It was down about 2.5% for the whole year last year. It's down a little bit more this year, and it may drop a little bit further going forward. So this may be indications that the industry is beginning to shift from sort of liquidation mode to stabilization and eventually herd rebuilding mode. We're not there yet, but we may be beginning that process at this point in time. The other key factor will be beef cow slaughter. It was down sharply last year, well, down quite a bit, but not enough to suggest that we were regrowing the herd. It's down a little bit more this year. So all of those are encouraging signs from the standpoint of herd rebuilding, but we're not there yet. We also have to keep in mind carcass weights. I'm not going to dwell on this, but obviously as cattle get fed out, then that affects carcass weights, and that can change. It has a seasonal pattern to it. It's been affected a lot in the early part of 2024 with the winter storms that we had in really after Christmas and in January. These are steer carcass weights. You could look at a similar graph for heifers. Carcass weights have dropped sharply, but that's probably about now sort of out of the system, if you will. Those impacts are mostly done, and more than likely we will see these carcass weights actually increase in terms of the annual total or the annual average for the whole year as we go through the year. They typically decline seasonally until about June, and then they start going up in the second half of the year. So all of that said, when you look at slaughter numbers, you look at carcass weights, that translates into beef production. I said this earlier, but Beef production was down 4.7% in 2023. We expect it to be down another 5 plus or minus percent in 2024. So that affects obviously the supply of beef is tighter. There's going to be less beef available. There's plenty of pork. The pork industry actually continues to expand a little bit. The chicken industry may expand a little bit faster this year. So one of the concerns from a beef industry perspective is on the supply of competing meats, if you will, and the impacts that might have on consumer demand. Frankly, for the last 3 years, we have not seen much impact that has been negative to beef demand. It has been very strong and very robust through this period, but it is something that we keep watching, particularly as we tighten supplies and squeeze that consumer a little bit more with less availability and generally higher prices. So we do expect beef consumption to decline in 2024, 25, was down a little bit in 2023. This is not an indication that beef demand is getting weaker. It's simply an indication that we don't have as much beef. So you can't eat it if you don't produce it. But as long as the prices reflect that tighter supply, then beef demand is still very good. And so that will be the situation we're monitoring going forward. If you look at the carcass level, so box beef cutout, it's actually above a year ago. It's been quite strong, generally speaking, and retail prices even more so. Retail beef prices are very close to record levels. They have been for several months. They actually increased last year. So again, we watch this going forward. As long as we don't see major erosion of these price levels, and they'll frankly probably go a little bit higher because, again, supply is going to continue to get tighter. Beef prices have held up relatively better than pork prices. There's been some ups and downs there. Chicken prices have been pretty flat, not necessarily a lot weaker, but not increasing, generally speaking, like the beef prices have. So all of those are factors that we have to watch on the demand side. So far, so good, basically, as far as beef demand. Choice select spread usually bottoms about now, and it appears that it may have in the last week or two. And then it starts going up as we move towards grilling season, and we start seeing more demand for those steak cuts that we like to grill in the summertime. I want to talk just a little bit about trade for a couple minutes. Beef trade of beef and cattle, and then we'll finish up with a few slides on back to the inventory and the cattle cycle and what can happen with cattle numbers in the next few years. Beef exports were actually at an all-time record in 2022. And so this shows you the total, but it also shows you the major markets. So, we export primarily to Asian markets, Japan, South Korea, China, Hong Kong, but also to our neighbors north and south in terms of North America, cattle, Canada and Mexico, as well as Taiwan. We did see and expected to see in 2023 some decrease in beef exports. Again, we have less beef, we have higher prices, and generally speaking, we've had a strong dollar most of the time. So all of those things are headwinds for beef exports. So we'll probably see some additional erosion in beef exports in 2024 as we go forward. But it's kind of the normal market response to the situation that we're in. The U.S. is one of the biggest beef exporters in the world. We're about number 3 or 4, depending on the year. We have been as high as number 2 recently, actually. But we're also a major beef importer. Here's the exports last year, and so they all add up to this total that you see on the right-hand side here. For beef imports, we are one of the biggest beef importers in the world, and we have been for many, many years. And so this shows you, and they did go up last year for exactly the opposite reasons that exports went down. We have limited supplies and higher prices, and a strong dollar makes imports more attractive. So we are seeing, again, the sort of the expected response in the marketplace to current market conditions in terms of some increase in beef imports. Where does it come from? Right now, it comes from Canada, Mexico. Australia is coming back. It jumped up sharply last year as a supply. New Zealand and Brazil make the top 5 markets there. And so we'll probably see that again. I didn't put the annual or the monthly numbers in there, but imports will probably go up. What do we import and why do we import beef? I get this question a lot, and that's because beef is many different things. There's lots of different products that we produce in this industry, and most of what we import, these are those major sources. So Australia, New Zealand, Mexico, Canada, Brazil are the top 5 markets. And the biggest chunk of most of those imports is what we call trim here. It's processing beef. Basically, it supports our ground beef market. We love hamburgers in the U.S. We like to go through the drive-through and get those. It used to be a dollar menu. I don't think we have dollar menus anymore, but they're still those very competitive burgers. And the reason we do that is because we have to have some additional lean beef from somewhere to mix with the trimmings that come off of our fed cattle in the U.S. And so that's what most of those imports are typically. There's the beef imports from last year. Excuse me. The wind is blowing in Oklahoma and the cedar trees are already pollinating. So I'm struggling a little bit. A little bit on live trade real quick. We do import cattle from both Mexico and Canada. We also export a little bit of cattle to both of those countries, but by far we import more cattle than we export. So these are the cattle imports from Mexico. They were up last year in 2023, but that was because 2022 was the lowest level we had seen in many years. So they're actually pretty much in line with kind of the average of the last few years. These are all feeder cattle. And I say that they don't go straight into feedlots. Many of these cattle are fairly lightweight. They will go out in stocker or backgrounding programs typically, and then go into a feedlot. Mostly steers, but some spayed heifers come in as well. From Canada, total imports were actually down slightly last year for the whole year. And it's a much more diverse set of cattle that come in from Canada. We get fed cattle from Canadian feedlots that go straight to processing plants in the U.S. when they are imported. We get cull cows and bulls that also go straight to processing and become, just like our cull cows and bulls, part of our ground beef market largely. And then we also do get some feeder cattle from Canada that go into U.S. feedlots when they come into the country. So again, it's kind of normal trade. There's nothing really unusual going on in those trades. They've been there for many, many years in most cases. So all of that said, you saw this chart earlier, but I've added a little bit to it just to emphasize that beef production is falling. It's going to fall even more in 2024. We expect it to fall through 2025 at least, and we'll continue to see those tighter supplies. We simply do not have the animals right now to maintain the level of beef production that we could have in the marketplace. The market would support a higher supply of beef at reasonable levels, reasonable price levels, and we will be encouraged to rebuild those numbers going forward. Again, the ability for us to recover this industry and rebuild the herd, which then in turn rebuilds supply of cattle for beef production, is limited by the fact that we have slaughtered a lot of the females the last 2 to 3 years. This graph shows for 2023 and 2022 both, more than 51% of all of the cattle we slaughtered in the U.S. were female, heifers and cows. And so we have not done that for a long, long time. We haven't done it in the U.S. At that kind of a level relative to total slaughter since 1986. So the short answer is we have a very limited supply of females to work with, both cows and heifers. That means we simply cannot turn this thing around very fast. It's going to be a slow process. Given the biology of cattle production, it just simply can't happen very fast. So when we look at recent history, or relatively recent history, the last cattle cycles was a low in 2014 to a peak in 2019. Here we are down again. We're probably not quite at the low yet, frankly. It'll probably get a little bit smaller, at least in 2024. And potentially even beyond that. But at some point it will bottom and we will try to regrow. So if we think about how we did it the last time, the process of going from a low to a peak in terms of herd expansion involves two things. We save heifers for breeding. That's what this heifer retention line is. And we decrease cow culling to a minimal level. There's always some level of culling. Some cows just wear out and we're going to have to cull them, but there's a fair amount of discretionary culling that we can cut back on when we need to and we have incentives to. And so cow culling drops to a low level. It dropped in 2015. Heifer retention was at a high level in 15, 16, 17. And so the combination of those two things is how you put together expansion in herd growth. What that leads to in the short run is that you squeeze cattle slaughter even more. Cattle slaughter in 2015, which was a year into herd expansion, was at the lowest level, or a year to 2 years, I should say, was at the lowest level since 1963. And then we rebuilt it. So here's where we have been, 2022, 2023, cattle slaughter was here. You know, that's kind of like over here at the last time, if you compare as an analogy or as an analog to the previous situation. So what this suggests is that cattle slaughter needs to fall a lot more in the short run. That will happen when we retain those heifers. We don't send them all to the feedlot. We keep more cows collectively in the country for breeding. And that's how we will put together herd expansion. So I'm just almost done, and then we'll certainly have time for your questions because I'm just very near the end, 2 or 3 slides more. The bottom line is this herd expansion compared to the last one, and you remember that earlier chart where it showed a 2-year peak in prices. I think this one is going to be significantly different in that it's going to be a slower process to rebuild. And that's not even counting on more drought. We may have more drought, which would extend it even beyond that. But even without any drought contributing to the problem, it will be a slower process this time. We have not seen the highs in prices yet, and we will stay at relatively elevated prices for a longer period of time. I think we're looking at 3 to 4 years of generally higher prices before we can. Now, at some point in time, we will respond. We will probably, peak this thing out. We'll price our way back into, or we will produce our way back into lower prices, I should say. That's kind of the way markets work. They always say the best cure for high prices is high prices. And that's certainly true. But in the cattle industry, in the situation we're in, that will not be a fast process. We will eventually respond to high prices by producing more cattle, which will lead to lower prices. But that's not going to be a fast process going forward. And there's a number of things that contribute to that. The potential for drought, the fact that we don't have any females to start with, the cost of rebuilding the herd is going to be significantly higher this time than it was 10 years ago. All of those things are going to contribute to that. So again, this emphasizes what we said earlier. This was a relatively short sort of 2-year peak in cattle prices. Where we are right now is not the peak. It's somewhere over here. We're at least 1.5 to 2 years away from the tightest squeeze in cattle numbers from a feeder cattle and fed cattle production standpoint. So we will see higher prices yet. And again, it's going to take longer. There is no way that we can rebuild the cow herd in 2024. The numbers simply will not support it. The best we could do potentially would be to hold steady with the beef cow herd. It's down here right now at just a tick over 28 million head, 28.2 or 28.1. We might be able to hold it steady, although I suspect the odds are that we will continue to decrease a little bit in 2024. I don't think we can grow much even in 2025 if we start the process in 2024, because it's going to take a while. Think about it this way. If we save a heifer calf in 2024, you can breed her in 25, she calves in 26, you get more beef production by 2027. So that's kind of the timeline that we're working on here in terms of higher prices. And because of all of that, we are, I'm estimating, and this is kind of a consensus forecast, not just me, other analysts, that on average, we will see higher feeder cattle and fed cattle prices in 2024, 2025, at a minimum, And we're not suggesting even that's necessarily the peak or that it's over then. That's just as far out at this point as we're forecasting this thing. It would appear we've got a long time ahead of relatively strong prices. It's going to depend on the drought. It's going to depend on producer expectations in terms of how it plays out. But given the situation we're in, there's just really not much that can change that. The market focus right now is increasingly on the cow-calf level because that's where you've got to start to rebuild the herd. And so that's why we're seeing these calf prices going up even faster than feeder cattle prices and fed cattle prices. And that will continue to be the case. And because of that, cow-calf producers have a lot of opportunity for very, very good returns or profitability, if you will, in the next couple of years. Again, that's as far out as we're going, not necessarily that it's over then, but good returns going forward. Now, if you want to maximize profit, you still have to manage costs. So you probably have a chance to make some money in any event, but you can make even better returns if you obviously manage costs as well as you can. Pay attention to the cost side, which you actually have more control over. But the market is going to provide lots of incentives for you to benefit from the current situation, as well as encourage regrowth in that beef cow herd. With that, this is how you find me. That's my email address. You're welcome to contact me if I can help you. I do write a weekly newsletter with some colleagues of mine from Animal Science. It's a free newsletter. If you'd like to get that, you can scan this code or send me an email and ask to be put on the newsletter list. We don't sell anything. We don't give it to anybody else who will bother you about selling stuff. It's just for what it's worth. We write several short articles each week and make that available if that's something that you'd be interested in. So Don, I'm going to stop there and see what questions we have and try to take care of those.
Thanks, Derrell. There's no questions in the chat, but Whitney O'Rourke is raising her hand. So Whitney, I'm going to go ahead and allow you to talk. If anybody else would like to come off mute and ask questions, just raise your hand in the chat and I'll take you, or I'll allow you to talk. Okay. Make sure I'm doing this correctly. All right, Whitney, I don't know if you had your hand up for a question, but you're welcome to come off mute and ask.
There she is. Maybe.
Maybe. Can't hear you.
We're not hearing you, Whitney.
We can probably come back to you, Whitney. There is a question in the chat from Sean. It says, what predictions or insights can you provide for the future of the cattle markets based on these 2024 trends and development? Will it remain the same like this for a while?
Yeah, that's kind of where we ended up just a few minutes ago. I do think this is going to last. I think 2023 was really the first of several years of generally higher prices. 2024, we expect to be even higher on average. 2025, higher yet. Now, at some point in there, we will reach a peak. I don't expect it to happen before 2025 at the very earliest. And even then, I don't know that I would expect it to sort of fall apart on the backside, if you will. Now, somewhere in here, there will be an actual peak in the market. Again, I would expect that to be maybe in 2025. But I think we're going to be in generally higher prices, starting with 2023's run up in prices. I would say we're probably going to have high prices at least through 2020 or into 2026, if not through 2026, and perhaps even beyond that. That's a scary thing for a market analyst to say, by the way. We're at record price levels now, and I'm telling you they're going to go even higher for at least another 2 years. That's kind of a scary prospect, but it really speaks to how sort of dramatic the supply situation is that we're in. Now, all of that's predicated on, lots of external things that could impact the market. Obviously, we got to watch beef demand. So if something happens to really erode consumer demand, then all bets are off. So we have to keep an eye on that. But we also have to just watch general macroeconomic conditions in the U.S. and around the world, global events, geopolitical events. We're in an election year, so there's all kinds of things that can add volatility to these markets. And I should have said this earlier, but I'll say it now. just because we're very bullish on the market right now doesn't mean that you shouldn't think about risk management. Because lots of things can happen that can cause short-term volatility in the market that could impact you at a critical time when you've got to market some animals, even if it doesn't change the overall, tone of the market or the trend in the market. I'm very bullish on the general trend, but also recognize that there can be a lot of bumps in the road along the way. And at these high prices, you got a lot to lose. So you really need to think about ways to make sure you kind of protect the bottom side of this thing in case we do have some sort of unexpected, call it a black swan event, that any number of things could cause that. So you want to be prepared for that regardless of how bullish you are in the market.
Thanks, Derrell. Art says great information. Thank you. Justine is saying it's scary, but it's great for those in the cattle industry right now. Sean has another question. Is there any significant policy changes that will affect cattle production?
Boy, politics is a whole other ball game. So, I wouldn't say never. We continue to monitor any number of, all kinds of things that potentially have impacts, particularly on individual producers. Most of the policy things that I'm aware of that we continue to monitor, so not necessarily new things. I don't know that I see anything particularly new. And again, I try to figure out cattle markets. I can't figure out politics, so I'm not even going to pretend to. But most of the things that would be policy wise would be things that might impact you more on a cost side, more so than probably the market level. Short of something really dramatic like some major trade blow up of some kind, which would be, if it happens, would be purely political in nature. But beyond that, most of the things, policy kinds of things that impact cattle producers continuously are things that affect typically your cost of production more so than the overall market prices. Important, you need to monitor those, but it's probably more on a cost basis than a revenue basis.
Thanks, Derrell. Justine is asking, what are you seeing or feeling regarding lab-grown cultured meats, and how might that affect the markets?
Good question. Those things are out there. We've got sort of, on the one hand, we've got plant-based protein foods that can be called meat substitutes in some cases. Those are, and that's not your question, I'll get to it in a second, but I'll put it in the same category as this. Plant-based foods are there. They're not really growing very fast. They're not a very big part of the market. I don't think they're going to go away, but I also don't think they're going to grow tremendously. The lab-based meat, even more so. It's very, very small. What we know now is technically we can do it, but there is nothing that suggests that we can do it in any way commercially viable, let alone whether or not there would be any consumer acceptance of the stuff. So I don't see that as a very big threat for the foreseeable future. People will keep doing it just partly to see if they can do it, but I don't think it's in any shape a viable segment or anything that will impact the overall market for the foreseeable future anyway.
Thank you. Justine is saying that's very much the same category. All right, folks. Oh, I see another question. Sorry. As a lender, is there anything we should keep in mind in regards to providing technical assistance? So,
great question. There's maybe two parts of that. One is there may be some government program kinds of things that you want to be aware of that could be a wide range of things. And I'm not really a policy specialist, but part of those could be the risk management things I talked about. So again, producers and lenders certainly should be aware and maybe encouraging their producers to use some downside risk protection tools, livestock risk protection, LRP, or perhaps just doing it directly in the futures market with options to protect some of that risk as a part of that. There may be other programs that can be important, again, in terms of they tend to be cost side things, cost share programs, those kinds of things. The other part of it, though, that I would mention, and I'm glad you asked that, is from a lender standpoint and obviously the producers themselves. I mentioned the high cost of financing herd rebuilding. And I think that's a pretty critical question. When we get into this kind of a market, we will tend to see those bred heifer and bred cow prices actually go higher than you can sort of justify on paper. They sort of they get to a point where they really, you can't make them pay for themselves in the short run. And what that means is that an existing operation is going to roll those high price females in and kind of average them against existing equity that exists in the operation, and recognizing that that's what you're doing, but somebody somewhere is going to rebuild this herd, and so even at high prices. So I think what that means is that lenders and producers themselves should evaluate sort of their individual capability from a financial strength standpoint to be able to absorb and be a part of that rebuilding process and purchasing some of those very expensive females. Again, sort of knowing that you have to kind of subsidize them out of the rest of the operation to some extent.
Thanks, Derrell. Art is asking, have you seen any change in the processing impacts from the Biden admin focus in local processing?
There's been a lot of emphasis ever since the pandemic, since COVID, on local processing facilities. And those have, they're out there. I think they've had some degree of success, not really impacting the broader market, but certainly they can be very important in a local context and in terms of both buyers and sellers, both consumers and producers, in terms of providing some of those local markets. I don't think any of that really changes the broader picture, and I don't see any real changes at this point in the broader commercial industry. Although I will say that the environment we have right now obviously is going to be a challenge for really everybody above the cow-calf industry is a margin operator in this business. Whether you're a stocker producer, feedlot producer, a packer, or a retailer, it's all about margins. You're buying and selling product, and you're trying to capture a little bit of margin in between. Cow-calf producer is more of a primary producer. We're turning grass into meat. And so it's a little bit different economic basis, but everybody else is a margin operation. Packers are going to struggle tremendously for the next several years because of limited cattle numbers. There simply won't be, feedlots will too. There simply won't be enough cattle to run at full capacity. They're going to have, cost challenges from that standpoint. And so, there's all of those players are aware of this, and they're making plans on sort of how they're going to suffer through this. There's really nothing we can do about it in the short run. We can't manufacture cattle out of thin air. So it's just it's where we find ourselves. But I can assure you that my contacts in the industry, kind of at all levels, everybody's aware that we're gonna really struggle. And I say all that to say that some of these smaller processors or small to mid-sized processors that have either started or some are in the process of being constructed going forward, those are going to have real challenges going forward. And there was news just this week that one of those newer kind of operations that's not real small, not like local small, but relatively small operations in Missouri has already announced that it will cease operations in April. I think some of those kind of level of businesses are going to continue to struggle through this process, and so that will be a particular challenge for many of them.
Thanks, Derrell. So we have a couple minutes here to go. If anybody has any last minute questions, please go ahead and place them in the chat or in the Q&A box. In the meantime, Derrell, do you want to give us just a little overview of part 2 that's coming up on March 26th? And I'll put the registration link in the chat for folks that want to join us next month.
Yeah, you bet. So what I'd like to do next month is sort of take this big picture view that we've developed this time, and then go through some of the the things that producers individually can act on. So I'd like to talk a little bit about some of the work that I've done, some research that we've got on factors that affect the value of feeder cattle at the auction, for example. So we've done lots of studies, collecting sale barn data and analyzing what explains the difference in value from one set of calves to another set of calves. Part of that process is also to talk about things that add value to your calves. And so we've got lots of data from various programs, but one in particular in Oklahoma on preconditioning programs and certified preconditioning programs that add value to calves. And I'd like to show you some of those numbers. And then I'm going to show you some of just the basic kind of tactical marketing questions. We will look at seasonality of feeder cattle and fed cattle prices, and how you can think about how that impacts the timing of when you make marketing decisions. Part of all of that process will be the question of, from a cow-calf standpoint, of, do I sell the calves at weaning? Do I retain them through a preconditioning program? Or do I retain them even beyond that in a backgrounding or a stocker type program and market them perhaps in a different year and in a feeder cattle market rather than in a calf market? So those are the kinds of things I'd like to get into next time and provide, based on some of the research we've done at Oklahoma and other places, and hopefully provide some pretty hands-on kinds of tools that producers can use to sort of make decisions going forward. And all of it will be in the context of this market environment that we're in right now.
Perfect. Thank you. I hope everyone's able to join us for that. I put the registration link in the chat. Thank you, Dr. Peele. We're very grateful for this presentation today. I had questions written down, but as soon as I wrote them down, you answered them. So thank you for being so thorough. Just a couple things from our end here at Akiptan. We have a survey. I put it in the chat just now. This is going to help us to develop any kind of webinars that you as producers need to build your operations. Please fill that out and send it back to us. Tomorrow we have another webinar coming up, and it's around our Native Ag Youth Business Plan competition. So we've invited 16 to 18-year-olds to participate in this contest. We are doing incentives. There's 3 prizes that youth can win. So please check that out on our website and join us tomorrow from 4 p.m. to 5:30 p.m. Mountain Standard Time. This recording will also be available on our website within a week, and so you can rewatch it or watch it when you have some downtime, or reshare it with folks that also need this information for their operations. And we also need to name our youth scholarship program that we have. It closes April 30th for any native agriculture students that are going into the industry. It's $2,000 this year, and we are accepting 15 applications. So with that, I have also put Derrell's email in the chat earlier. You're welcome to sign up for his what is it, the talk you do, Derrell?
Well, we do a weekly newsletter, so
Yeah,
it comes out by email every Monday morning. So let me know if you'd like to get that.
Yep, and his email's in the chat. And thank you all for joining us today. We will see you tomorrow, or we'll see you next month for part 2. Have a great day, everyone.